It's a new week. We have 55 minutes to do business here on Business Incorporated. Welcome to the program. Here's what we have prepared for you. In Uganda, inflation is surging. We'll give you the full details on the program. Egypt and South Africa have a trade mission and they're focusing on agriculture. Building entrepreneurs in Nigeria. We see what Onitsha Business School is doing. Good afternoon, everyone. I'm Ini John McCall. Let's do business, starting from the global space where oil is flat today as upbeat manufacturing data from China, which is the world's biggest crude importer, led to renewed optimism for fuel demand. Although uncertainty about the Ukraine peace deal and global economic growth from potential U.S. tariff, that is still looming. Look at the numbers for this afternoon. It's 0.16% in the green. That's what we have for Brent at $72.92 a barrel. WTI is 0.07%, but it's in the green, and it's $69.80. Prices briefly rose after official data showed that China's manufacturing activity expanded at fastest pace in 3 months in February, as new orders and higher purchase volumes are leading to a solid rise in production. And investors are eyeing China's annual parliamentary meeting, which starts March 5, for further measures to support a battered economy. Last month, Brent and WTI posted their first monthly declines in 3 months as a threat of tariffs from the United States and its trade partners shook investors' confidence in global economic growth this year and has reduced their appetite for riskier assets. Well, we're still staying around oil now. Dangote Petroleum Refinery and Petrochemical says that it would absorb 16 billion naira loss by refunding 65 naira per litre to marketers to allow Nigerians benefit from the cheaper fuel. So somebody's paying for that cheaper fuel that we're enjoying. In a statement issued over the weekend, the refinery said that it will refund customers who purchase premium motor spirit, that's petrol, at rates higher than the advertised prices from any of its key partners, which include Adova, Hayden, and MRS. The refinery states that this is part of its ongoing efforts to ensure that Nigerians are the primary beneficiaries of its most recent price reduction of petrol from 890 to 825 naira per litre. It explains that the step, which takes effect from February 27 across the country, guarantees that none of its valued business partners will experience a loss because of that price change. Well, let's leave the oil space now. See what's happening with metals. Gold prices firmed on Monday after hitting more than a 3-week low in the previous session, supported by a weaker dollar and safe haven buying that was triggered by concerns over U.S. President Donald Trump's tariff policies. Look at the numbers right now. 0.3% up. That's what we have for spot gold, but it's not yet back to that 2,900, which is the record high it had hit before now. So it's $2,886.54 per ounce. U.S. gold is up 1 full percent, so it's at $2,878.90 per ounce. Spot silver is up, really up 1.79%, $32.06 per ounce. Platinum is up more than 2%, almost 2.5%. It's $960.80, while palladium is 3.03%. So we see that a lot of things are moving, and of course it's built on some data from China, as well as it seems there's a bit of stability now following all of those threats from President Donald Trump. But don't forget, March 4 is tomorrow. The implementation of those 25% on Mexico and Canada is supposed to start tomorrow. We'll see what happens tonight and all of the peace talks, if that perhaps will calm some nerves, and or investors will run to the metal space for hedging. And still talking about President Trump now, the Nigerian Economic Summit Group, the NESG, has warned that the U.S. President Donald Trump's tax reforms may lead to a reduction in foreign direct investment into Nigeria. This was contained in its report titled Trump's Policy Playbook strategic implications for Nigeria released in February. The NESG said that Trump's tax policies may encourage U.S. firms to repatriate investment, thereby reducing capital inflows into Nigeria. To counter this, Nigeria should attract investors from China, from the EU and the Gulf nations by improving its investment climate. At the same time, the NESG says that the future of African Growth and Opportunity Act, that's the AGOA, which is set to expire in September, remains uncertain under Trump's second term, especially given his less focus on Africa during his first term. Well, we're still in Nigeria now. The federal government has announced plans to secure a total investment of $122.2 billion to diversify the nation's energy sources and reduce dependence on the national grid, as well as enhance the overall stability and sustainability of the country's energy infrastructure. This investment proposal was disclosed in the newly released 2024 Nigeria Integrated Resource Plan and the National Integrated Electricity Policy. The new policy document, which is awaiting approval from the Federal Executive Council, seeks to create a holistic framework for the implementation of the Electricity Act, address transitional challenges, integrate with other energy policies, and detail renewable energy strategies, among others. The amount to be raised between 2024 and 2045 represents 21 years and is to ensure energy diversification from the current electricity sources of hydropower and gas-fired thermal plants to the renewables. Now, the Center for Black and African Arts and Civilization, CBAC, says it has taken steps to develop Nigeria's creative industry and tourism sector as part of efforts to diversify the country's economy. Speaking on Business Morning earlier today, the Director General of CBAC, Aisha Adamu Augie, highlights some of the proactive measures carried out by the agency.
Conversations are happening where people are actually thinking about it. And if you look at what the ministry is doing, they're building up initiatives, whether it's Screen Nigeria to showcase Nigeria everywhere with our film. We have a tax credit scheme for the film production to, of course, support people, because that's one of the major problems people in the film production space have been talking about. You look at the Creative Economy Development Fund, which was recently just announced, and that is like to build gaps within the infrastructure space. You also have the Creative and Tourism Infrastructure Corporation, right? All of these things are looking at how to fund the infrastructure, how to build the skills. I think I forgot one, which is the Creative Leap Accelerator Program. For us at CBAC, we have a Pan-African Indigenous Skill Development Program, because the plan is, how do we actually export these services to the global community? Ahead of AFCFTA, for example, for those who know about AFCFTA, by the time Africa starts trade across our nations, how do we ensure Nigeria is at the forefront at pushing out these services? You look at the likes of Korea, they were very intentional with K-pop, K-beauty, K-drama. It wasn't something that just came up overnight. So we're seeing success stories globally that we have had organically. So now the government is on board. For the first time, we have a ministry that clearly specifically focuses on that. And I see, especially for someone who was part of the sector, I do have hope.
All right, now let's talk about upscaling entrepreneurial skills, not just in the creative and tourism area, but, well, entrepreneurs generally. And we have right here in the studio to talk about that Professor Olusegun Sogbesan is the founder and chairman, governing council, and director general of Onitsha Business School. Prof, good afternoon and welcome to the program.
Good afternoon. It's a pleasure to have me.
Good to have you. So I think the first thing would be, I mean, when somebody hears Onitsha Business School and then they hear Professor Olusegun Sogbesan and they're like, oh, I thought it would be an Igbo man since he's Onitsha in Anambra State. And you're the founder of the school.
By his grace.
So how come? What took you across the river?
It's a long story, and credit should be given to NYSC, because it's the program of NYSC that took me to Anambra State. And after my interaction with the environment, have and need. To also contribute to socio-economic development of the state, of the region, of Nigeria and Africa.
So you've been there since after NYSC?
Yes, 34 years ago.
Wow. That's wonderful. I mean, that's the kind of Nigeria we do dream of. So tell us about, when we're talking about entrepreneurial skills, we know that for the Eastern brothers and sisters of Nigeria, they have a certain approach to it, which may not really be, they're trying to formalize it now. At least we've seen a movie that tried to do that. I mean, the service style of getting someone, workman, and all of that. Is that what you do at Onitsha Business School?
Not really, but it's just part of what we do. Entrepreneurship is, the concept of entrepreneurship is quite different from business skill and trading skills. But even though the trading skills and business skill is a component of entrepreneurial activities. But what you have just asked now is what we have done. In recent times, we've been able to work very hard on the indigenous entrepreneurship scheme, which is generally referred to as Igba. Many people have talked about it, but we are not just talking. We have started walking the talk at Onitsha Business School. So
how do you work it? Do you work with universities or secondary schools, or how does it work?
Exactly. We've developed curriculum in that direction. We have trained over 650 students in that area, and supported and in collaboration with International Bureaus, PLC. We have extended our good hands to so many universities, Nnamdi Azikiwe University, University of Nigeria, Enugu State University of Technology, St. Paul University, Oka, and so many of them have already applied to collaborate with us in that direction.
So is it after the students have graduated, or is it during when they're still in school?
While they are still with their masters, the penultimate year, we engage with them, and we try to give them a body of knowledge that will help them to scale up their businesses, not just in the trading aspect of it, but taking it up to a business level and also to entrepreneurial level.
Yeah, because I wanted to ask, I mean, the system we know with our Eastern brothers and sisters is mostly about trade, but in Nigeria now, what we really need is to add value, not just trade, import, and, you know.
That's part of the curriculum. We do the customer relationship management, export business management, international trade, and we also help them with the business model generation. We help them with business of growth strategy in business, and every other one. And of course, it's already been formalized in so many universities right now as I'm talking to you, and we want to engage every other university in Nigeria too, because this indigenous entrepreneurship is a contemporary need that we need in Africa to redefine African economy. If we don't do that, we continue to copy what is not applicable in our own environment. And that is what we are doing at Onitsha Business School.
So when you say you're working with schools and all that, so people come to Onitsha Business School and then you connect them to universities, or is it the other way? People who come from the universities, you connect them to Onitsha Business School?
Not really. What we do is that after the development and the design of the curriculum, the development design of the curriculum, we had a conference of that design with so many professors from different universities at ASCON, Badagry. And then from there, we started presenting it to universities, and they embraced it, because that is only good program that most universities can engage in to bring the gown to the town. Bringing the gown to the town, we need to apply indigenous entrepreneurship concepts And what we did the first time is to test run it after our research report. And we trained over 300 participants from Onitsha, Owerri, Enugu, Haba, even in Lagos here. So 50 participants in each city. And the result indicated that we can do better. And the second time I said, no, we can't do it alone. Can we try to formalize it? And we step into that, and thank God university embraced it. Not only to formalize it, to institutionalize it. We want to institutionalize Igba Boy, which we call Indigenous Entrepreneurship Scheme. And of course, it's not only on paid. We have skill, acquisitor, the carpentry walls, and every other one. Of course, it's not peculiar to Ndigbo. We still have all the places. In the north, we have apprenticeship. In the west, we have apprenticeship. These are what we call indigenous entrepreneurship scheme. And once you engage in it, it's easy to transfer. It's easy to relate with. And of course, it has to do with some of the knowledge, the traditional knowledge we've acquired. And of course, if something is like a culture or tradition, the assimilation of such skills is easier.
Yeah, but are we feeling it in the economy? Because I think that what we're trying to do now in Nigeria, what we ought to be doing is to work on the issue of unemployment. So people do not just go through school and start looking for jobs. People should actually be able to create jobs. You know, people want to build houses in Nigeria. They look around Cotonou and all of that for tilers and all of that. Do we have a system that can fill in this gap, deal with unemployment, and provide the skills that are needed?
Oh, thank you very much. I think you are just to talk about what Onitsha Business School is doing. We have a center in Onitsha Business School. It's called Industrial Skill Acquisition and Application Center. Our first target is the university graduates and polytechnic graduates. Our intention is to bring out the strategic intent, anyway, of that program is to bring out the entrepreneur components of every course of study in university. And this we have done with 2 streams, and it's been a great success.
But where are your graduates? Where are they now?
Most of them are already on the private sector doing great things. Of course, we have about 5 of them that already have taken over some countries in West African region. And they're doing well in Nigeria. Of course, one of our students are the first to export sesame seed from Southeast. And they are only the only, in fact, I have another one that is have the certification of China government to export this seed from Cassia Street, and in large quantity. And these are the things that we expose them to. We build the knowledge and capacity in that direction, that we can have the youth. We call them emerging entrepreneurs. And they are between 45 downward. Because those old ones have fixed mind. And the energy, they don't have the energy and the time to do some of the things that these younger people will do. And therefore, we've been able to do. Of course, recently we've just signed an MOU with one of our students, our old student, who is doing very well in Nigeria, and he wants to grow the farmers' income. About 60,000 farmers are involved in that project, 70,000 employees. And then they return back to the country in form of FX. It's about $2.4 billion. It's huge. And it's knowledge-driven. So entrepreneurship is knowledge-driven. And because we lack that knowledge, it's difficult for our graduates, our young ones, to engage with it. What we have the government do is skill acquisition. And of course, so many people have skills, and they've already acquired skills, and they find it difficult to apply it.
Some people have capital issues.
It's not capital issue. We better talk about funding. I think there's
funding.
Funding. It's not even the problem. The funding is not the problem. It's the knowledge of the business you want to do that is the problem.
Is that a bigger problem than issue of funding in
Yes,
Nigeria?
yes, that's a very big problem, because if you don't have good knowledge of business you want to do, you don't know the product you want to produce, the services you want to render, who are the customers, where are they, you don't understand, you don't have the strategic partnership, the key activities that are involved, and perhaps the expected streams of income. This you will not be able to, of course you should be able to do the valuation of that business. If you don't know who are your customers, how do you now produce, engage in services and expect somebody from nowhere to come? You should know their behavior, and that is what we do at Onitsha Business School. We help you to shape your focus on that business. Business from Onitsha Business School is making a case for an identified need. First, you must identify the need. The second thing is to make a case for it. And that making a case for it, that was making a businessman in that direction. And an entrepreneur is the one that aggregates all the resources, both human, the capital part of it, both the materials come to it. We call it 3 M's in academic work: the money, materials, and men, the 3 M's. And when you get this one together, you need to develop them before you deploy it.
Do we see this in the nearest future reducing our import appetite? Because, I mean, that's also sucking on the value of Naira.
One of the things we do, especially with our export business management, is we teach our students and we train them to have the ability to have export substitution, because there's a huge gap there. What are the things that have been exported into this or to Africa? You identify them. Is it possible for you to produce them in Nigeria or to render services in Nigeria? If the answer is yes, then that's the beginning. But who are the partners? What is the trade volume globally? If you have, like, let's say maize, you have a global trade volume going to about $2.something billion every year, or $500 billion every year. What part is Nigeria taking in it, or what portion? What shares are we taking? So those are the things that we stimulate their interest. So this is huge. We can play in it. So if you are looking at only Nigeria alone, it seems you have constraints and you have the fear of moving. Do your comfort zone. Let me just stay here. But when the knowledge breaks that fear wall, you will be able to go more to learn and then to implement. So.
Well, we look forward to when, we will see, feel the big impact of all of this, and perhaps reduce our imports, and all of that, and reduce our unemployment figures, because we see more Nigerians, young Nigerians especially, getting empowered and actually, involved in domestic production. I think that's actually what we really.
Of course, I think it's better that someone somewhere will come and conduct a due diligence of what we do at Onitsha Business School. It's not an ordinary business school. It's not a business school to promote master's degree, MBA and DBA. No. As we are working on entrepreneurial, creating and culturing and training them, we are also working on who we work with them. If you are an entrepreneur, you need a workforce that has the capacity and capability to work with you in your vision. And that is why we engage more in professional studies. We are producing more chartered accountants into the society. We are producing chartered bankers. We are producing procurement experts. And these are also in affiliation with notable institutions in Nigeria and all over the world. And of course, for capacity building, we are in partnership with European Global School, University Paris. And I have to tell you that Onitsha Business School is the first academic partner with ISACA. And ISACA is the body that certifies CISA and other things. So we are working to make sure that not only that we reduce unemployment, but we produce great entrepreneurs that will lead Africa after Dangote.
I didn't see that coming. Thank you so much.
Oh, it's very soon. Very soon.
All right, Professor Olusegun Osogbeson, founder of Onitsha Business School, Director General. Also, thank you so much, and we do look forward to having more entrepreneurs in the Nigerian economy.
It's my pleasure. Thank you for having me.
All right. Okay, now let's take a break. When we come back, we'll head to the markets right here on Business Incorporated. Stay with us. Welcome back. Still watching Business Incorporated on Channels Television. Let's head to the markets with Aniti Edit. Aniti, what news do you have for us?
A happy new week and happy new month, Ini. Well, I have a bit of a good news and not so good news. But I always like to start with the good news. The good news is that Nigeria stock markets, it was still able to maintain positive terrain for the month of February, 3.2%. Okay.
But we had a lot of negative close in the month of February. For instance, in the last 2 weeks, I think we've had 4 close in each of the weeks. And I mean, I did expect to see a positive close at the end of the month.
Well, and the final week of February, like you rightly mentioned, wasn't too good because we saw about profit taking in 3 sessions. The market was down 0.62%. That translates to more than 421.28 billion naira. But that means that investors were actually taking advantage of some of the gains. And then we also saw some people who were picking up the bones and trying to make some money out of what they put in initially. So, but let's start with the intraday market numbers. There you see on the screen there, 0.01%. That's a way to start the market for the month of March. Not stomping it, not stomping with maybe a giant leap forward or backward, but just mildly tepid, which the market had lost some points last week. Almost more than 0.5% was shed off. But the market has still been able to weather the storm and is still holding on to that 107,000 points, 107,808.43 for the market. But this week they will be expecting that cautious trading because earnings season, yes, we've seen a flurry of earnings, and that is not about to go anywhere yet. Tomorrow we'll be expecting that Seplat would be announcing its full year earnings result with an earnings call to be accompanied by that earnings report by one of the listed energy giants on the local bourse. For the Johannesburg Stock Exchange, it was a green day intraday trading activities session for that market, 87,146.38. For the EGX and the Nairobi Stock Exchange, we see kind of a mixed picture there. First of all, we see that the Nairobi Stock Exchange, it closed Friday. Mostly, if you can have that on the screen there for the Nairobi Stock Exchange and for the EGX, that's the Egyptian all-share index there, 30,958, almost at the corridor of the 31,000 index level, while for the Nairobi Stock Exchange all-share index closed Friday down 0.17%, 132.13. So that's a snapshot for the market on the African continent. Now, let's talk more about the financial markets, but this time the Forex market as well as the fixed income market. Obviously, last week, the final week of February, we saw that the Treasury bills market closed bullish. We saw the average yield there. The average yield there had continued to be in line with some expectations from analysts there as well as the traders there. We also saw that the bonds market was also bullish for the final week of February. At the same time, we also saw the FAC inflows, the FAC being shared to the 3 tiers of government, that's the federal government, the state, as well as the local government areas. So it's about to make its inflow into the financial system. But for more and other topical issues within the market, firstly, when we're reviewing the month of February, and then what to look out for the month of March, let's bring in Ebube Uneze, Forex dealer with Access Bank, to give us an insight into what happened last week throughout the FX market, the fixed income market, as well as what to expect. Thank you for joining us, Ebube.
Thank you very much, Aniete, for having me. It was a pleasure to be with you on the call.
Okay, so now, just give us just in a very short, concise information about review the fixed income market and the Forex market. Yes, we saw that the Naira has been stable. It recorded its highest level of stability against the dollar. But give us an overview of the market. We know it has dropped all the way from $40.92 billion to about 38 or thereabout billion dollars. So give us details about this and other fixed income markets instruments.
All right. Thank you, Aniete, for having me. So as you rightly mentioned, last month, in the month of February, we witnessed a prolonged period of stability in the FX market. We saw exchange rates range between 14.90 and 1520 during the course of last month. This stability in the FX market is largely attributed to I can refer to two policies of the central bank. One is the extension of the access to the foreign exchange market for BDCs. So we saw BDCs having access to the foreign exchange market, and the CBN also capping their sell rates to 1% of their buying rate. So what this did was it began to moderate rates in the alternative market. Another factor we saw responsible for the stability we witnessed last month was the rather surprising move by the central bank to hold the monetary policy rate at 27.5%. So this was a signal well received by the foreign portfolio investors who took advantage of this to also come into the market to supply the market with liquidity. So all in all, we had a very an improved liquidity. In terms of liquidity, average liquidity for last month was about $445 million. Total turnover for last month at $8.9 billion. The average rates in the foreign exchange market was at 1,500 naira to $1. So all in all, it was a pretty good month in the foreign exchange market. On the other hand, on the fixed income market, as I had earlier mentioned, we saw improved foreign portfolio investor participation in the local fixed income market. So it was a bullish market both on the treasury bills market and the bonds market. Last month, we saw the Debt Management Office conduct 2 auctions where they raised a total of, in the first auction, they raised a total of 670 billion with bids with stop rates declining from the previous auction level.
Okay. We're sorry to cut you because we wouldn't have. I know you want to give us more details, but we've seen that it was quite an impressive performance across the fixed income market as well as the forex market. But now, looking into March, I know that first we're expecting that inflows of about 1.15 trillion naira is expected into the market. Today, the bonds, the FGN savings bond, as well as NCB primary market auction of about 650 billion naira worth of maturities. Now, can you tell us how is all of this going to shape the fixed income market for the month of March?
Okay, thank you, Annette. So the general expectation is that it's going to be a liquid month. As I rightly mentioned, there's about the 1.53 trillion coming into the market. There's a bond maturing during the course of the month. And we also expect that from the DMO calendar on the treasury bill space, they are looking to borrow less than the maturities that are maturing within this month. So we have a net credit of about 700 billion coming from treasury bill maturities. Then we also have a bond coupon that about 549 billion comes to the system. So all in all, we expect a liquid month. As such, the general expectation is that we'll continue to see the downward trend in yields in the fixed income market.
Okay, so but what does that also tell us about government borrowing? Is the government still intensifying its borrowing? If you look at the bonds calendar for the first quarter, which first quarter will be ending sometime this month. So what does that tell us about government's borrowing plan?
Okay, thank you for that. So generally, one can estimate that what the government is doing is to take advantage of the bullish market to raise as much as they can, but we are seeing a slight reallocation from the short term to the long term. So we are seeing them borrowing more on the bond side than they are doing on the treasury bill side, and I think this is taking advantage of the demand that is coming to those auctions, and also to the cost management strategy as well. So the government is still borrowing, but within this first quarter, we are seeing them borrowing less than the instruments that are maturing.
Okay, Bube, I think we'll leave it there. Of course, we're very, very much satisfied and looking forward to how the market, the month of March, starts out. Well, not the ending, because the ending is far away. But thank you so much for your analysis on the show.
Thank you.
Okay, so from the African continent, we move over to the Middle East, where we see a kind of mixed. First, last week we saw the Dubai index and the Abu Dhabi index both in the red, but still opening the month of March in the red, 0.07% for the Abu Dhabi, for the Dubai, and 0.05% for the Abu Dhabi index. For the Saudi Arabia and the Qatari stock exchange, they were in the green at intraday. So from the Middle East, we move over to United States. Stock futures are rising slightly, and this is coming as investors. Tomorrow is the D-Day for that tariff announcement by the Trump administration, where they expected to slam about 25. They proposed about a 25% tariff increase. So if you can take a look at how the United States stock futures are performing for the Dow Jones Industrial Average, as well as the S&P 500 and the NASDAQ, they were mostly in the green, 0.18%, and the S&P 5 all in the green. And of course, there's going to be an action-packed week, because the markets will be expecting the February jobs report, which will show the state of the state of U.S. economy under Donald Trump, who is less than 100 days in office and still causing a lot of ripples across financial markets, global stock markets around the world. So from the United States, we move over to Asia. Asia markets mostly rising. This is because of investors are also seeking clarity on the Trump tariff. Trump has already said that that's 10% tariff on China, which is one of U.S. biggest rivals, the world's second biggest economy, that the 10% tariff will be slammed on that economy. If you can take a look at how the Shanghai is in the red in response to that, 0.12%, and the Nifty 50 down from 24,000 points to 21,119.30 for the close of Monday's trading session. So that's a wrap for the markets.
Thank you so much, Anita. Let's see what's happening in Africa now. The effects of harsh weather conditions are not only causing discomfort for Ugandans, but they're also affecting the price of food, impacting the economy, with rising food prices contributing to inflationary pressures. The latest consumer price index, that's the CPI, from the Uganda Bureau of Statistics, shows that annual inflation for the year ending February 2025 stood at 3.7%, slightly up from 3.6% in January, while the overall inflation rate remains relatively stable. The report highlights that fresh food prices have been a major drivers of this increase, and the annual food crops and related items in inflation jumped significantly from 0.2% in January to 4.3% in February. And this rise is largely attributed to the price increases of tomatoes, dry beans, cooking bananas, and green peppers. Among the food items experiencing the most significant price hikes are green peppers, and that's the sharpest rise, with increases of about 17% in February. And then in contrast to that, there's 5.4% drop in the price of before then. And the head of economics and statistics notes that the price increase is linked to several factors, most notably the unfavorable weather condition in the country. We move to Egypt, where the Central Bank of Egypt will auction treasury bonds today with fixed coupon worth 14 billion Egyptian pounds in coordination with the Ministry of Finance. The auctioned bonds are divided into two offerings. The first offering amounts to 4 billion pounds for 2 years, while the second offering is worth 10 billion pounds for 3 years. A coupon is an annual interest paid on a bond. Investors receive a coupon payment either annually or semi-annually from issuance until maturity, if they hold the bond until then. And then from Egypt, we see what's going on still in Egypt. Egypt's Food Exports Council has announced the launch of its first ever trade mission to South Africa. It's aimed at expanding business opportunities to South Africa, and also for the food industry sector in the South African market. South Africa ranks 43rd in the list of the most important markets importing Egyptian processed foods, with a value of $26 million in 2024, a growth rate of 7.4% compared to 2023 exports of 23.7 million. It's also the 7th most important non-Arab African country importing Egyptian processed foods according to data for 2024. All right, we do have some other African stories. I think one is from Ethiopia, where the government there has approved the commercial release of insect-protected maize following several years of rigorous efforts alongside transgenic maize. The government has also authorized the commercialization of genetically modified cotton varieties, and the decision made by the National Variety Release Committee represents a significant advancement for the country's agricultural sector. And granted early last week, the approval includes the highly anticipated Taylor maize varieties, which have been genetically modified for insect resistance and drought tolerance. And finally, in South Africa, in Durban, homeowners across that city are threatening to boycott their rates if the municipality fails to resolve the ongoing water crisis. More than 200 people, representing about 20 different groups under the umbrella of the Etwini Ratepayers Protest Movement Solidarity Campaign, gather in stands at quarries, fountains, sports grounds in Grainville, and they are voicing their frustration over water cuts, slow infrastructure repair, and alleged mismanagement of funds. Their demands call for billing to be fixed, infrastructure repairs with clear timelines and budget, and prioritizing piped water over tankers in informal settlement. They are also calling for robust oversight, allowing ratepayers input on contracts, budgets, resolutions, and project completion. Let's leave the continent now and get to Berlin. Well, you know what's happening after that meeting with President Zelensky in the Oval Office. A lot of meetings took place all through the weekend. European Commission President Ursula von der Leyen has said that the bloc will propose a plan to rearm Europe this week. And this comes after a summit of European leaders on Ukraine and defense in London on Sunday, 2 days after that disastrous, they call it, clash between Ukrainian President Volodymyr Zelensky and the U.S. President Donald Trump. We have Chiponda Chimbelu now joining us. Tell us more about this. Hi, Chip. Good afternoon. I wonder what kind of weekend you had, but with that explosive talks at the Oval Office on Friday, I'm sure EU did not have a lot of rest this past weekend.
No, well, geopolitics in particular, has been keeping all of us journalists here in Europe and, of course, across the world very busy. I'm sure everybody has been watching that. And here in Europe, it is clear that most EU leaders, Ini, are united in their bid for the bloc to continue supporting Ukraine. But there are two exceptions, and that is the leaders of Hungary and Slovakia. So both the Hungarian Prime Minister, Viktor Orban, and Slovakia's PM, Robert Fico, weren't at the summit in London. And those two leaders are more aligned with Russia on Ukraine. Now, Hungary's Orban has said that the EU should follow the example of the Trump administration and have talks with Russia on a ceasefire and peace in Ukraine. And he even said that a day after the disastrous clash in the Oval Office. Now, while other EU leaders, of course, were rushing to support their to show their support for the Ukrainian leader, Orban did the opposite, much like his Slovakian counterpart. Now, Fico's rhetoric struck an even harsher tone. He said Slovakia would not give any financial or military aid to Ukraine. Now, to proceed in unity, the EU needs all its 27 member states to agree, and that is something we will need to watch out for when the European Commission presents that proposal to rearm Europe this week.
Yeah, well, a disunited EU is certainly something that's very risky. But what can we expect for the relationship between EU and US?
Well, Ini, what we have seen is that there's a realization in the EU that European countries will need to do the heavy lifting when it comes to defense. And that is something that, of course, even the British PM, Keir Starmer, referred to yesterday. And that while the United States remains a partner, the transatlantic relationship is changing. Now, Washington wants more in return, and it is expecting Europe to raise its game when it comes to defense. And the Trump administration isn't stopping there, of course. It is also putting pressure on the EU with the threat of tariffs. The White House has threatened to impose 25% tariffs on EU exports to the United States. And in response, Brussels has said it has its own list of American goods to slap with tariffs. Now, differences on the war in Ukraine and, of course, trade are driving a wedge between Brussels and Washington. And, of course, they are also keeping diplomats and markets on edge with wondering what the United States president will do next.
Yeah, especially seeing that tomorrow is March 4 when he said the 25% on Canada and Mexico will commence. But I see this, it's a topic we're going to stay on for a bit. But let's switch and head to the market. How are the European stocks doing today?
Well, Ini, there's some good news. At least things are looking quite positive on European markets, and it is defense stocks that are soaring in trading. And that's off the back of that announcement that the European Commission will be boosting defense spending. Now, the shares of German defense group Rheinmetall were up as much as 17% in today's trading on the DAX. And that may have also helped the German blue chip index hit another record. It did cross 23,000 points for the first time today. And that is, of course, boosting the Stocks Europe 600. It is up more than 1% today. So it looks like it is set to continue building on 10 weeks of gains. And this week, of course, investors will be keeping a close eye on the European Central Bank. Now, there are expectations that the ECB will lower the key interest rate to 2.5%. Now, the latest economic data today also supports that prediction. It shows that inflation in the Eurozone eased slightly in February to 2.4%, and that is 0.1% lower than in January, Ini.
Yeah, a bit of good news there. We hope for more good news for stability of the economy. Chip, thank you so much for that update. We'll talk to you tomorrow.
Okay.
All right, now let's head to the crypto space. We heard there from Chiponda that defense stocks are doing well. Is it to the detriment of crypto? I wonder. But we know, of course, that announcement by President Donald Trump of a strategic crypto reserve, that helped to lift especially Bitcoin, but not just Bitcoin, even some altcoins. We saw them doing very well over the weekend compared to how the week started, upper week started, and how it ended. I saw Laddie sweating, through his head and every part of his face. So thank God for Trump, or thank God for Trump in your life, yeah?
Yeah, and I can imagine how those investors, were feeling. But now here's the thing. With the massive drops we saw last week, some investors must have felt like Bitcoin might even drop more, but that has switched. So some people must have still lost money.
Never say never, Laddie.
Even though we're seeing the market going
Never
up.
say never, Laddie. I think President Donald Trump is watching this program, and he might just want to surprise you.
He might say something else. But
yes.
that's the impact right there. It's green from the massive sell-offs that we saw last week. A couple of cryptocurrencies up about double digits at this point, 48%, 30%, just from that one statement there from the U.S. So we're seeing how sentiment from the U.S. and news coming from Donald Trump, how that's driving sentiment. Let's look at how the market is feeling. I'm talking about the fear greed index. Last time, investors were very, very afraid in this market. We had extreme fear, getting to lower digits of the double digits in the teens. We're now 33 points fear from extreme fear last week. But is the market out of the woods yet? I guess with time we'll find out. To some headlines now. Trump's strategic crypto reserves. We're seeing that rally because of this statement there on Sunday. U.S. President Donald Trump made good on his campaign promise to start a U.S. crypto reserve. In a post on Truth Social, where he made a statement, and we saw the impacts right there. He mentioned XRP, Solana, and Cardano. I think Cardano is up over 40% in 24 hours. So, and we're also seeing news that Trump is set to hold his first White House cryptocurrency conference. That's coming Friday. So, I don't know how bullish, that is for the market, but we'll definitely find out. A lot to look out for. Now we see Bitcoin risk that has spiked recently. According to a tweet by Swiss Block Technologies, Bitcoin risk has spiked. In context, we're seeing an index that had remained calm since October is now flashing emergency mode for Bitcoin. Risk levels have surpassed the August peak, triggered by a market turmoil from the yen carry trade, and now approaching September levels. So the last time that happened, Bitcoin corrected to about $53,000, but I know investors will be looking out for that bottom. Then Mr. Kiyosaki, Robert Kiyosaki, a renowned financial education advocate and the author of the popular book, Finance Management, Rich Dad, Poor Dad, has issued a gloomy prediction about the global financial system, adding that Bitcoin can help investors go through its future collapse securely. He also slammed Bitcoin ETFs, insisting that only real Bitcoin is worth buying, according to Mr. Robert Kiyosaki there. Then we're also seeing data this year alone, 2025. We've had about 4 major hacks in the crypto world. The first one, Bybit, February 21st, estimated loss was about $1.46 billion. Yes, most of that was recovered. Then Ads Power, between January 21st and 24th, they lost about $4.7 million to a hack. Femex lost $85 million. Mobi, January 10th, they lost $2.5 million. They recovered $1.5 million. But now, let's get an outlook on what to expect from most of these hacks, especially when it has to do with cryptocurrency and blockchain. So to help us now, we have Adebayo Tiamiu, who's a blockchain investigations and intelligence expert. Great to have you on the show.
Thank you for having me on the show. Nice to be here.
Right. So when you see the sums, that get lost with most of these hacks, it's quite scary because that's somebody's money that's going down the drain, somewhere. Somebody's going to get hurt from losing that amount of money from most of these cryptocurrency platforms. So break it down for me. How do you just wake up one morning and you're able to hack a massive platform that's supposed to have so much security? Walk us through how it happens.
Yeah, thank you so much for having me on the show once more. I think speaking specifically about some of the recent tasks we've experienced this year, the major issue around all of this hack is actually on Web 2, not necessarily on Web 3. In the past, there's always been some smart contracts having vulnerabilities, but right now what we are seeing is more of the Web 2 infrastructure, the information security infrastructure of some of these particular businesses that are getting phished and getting social engineered. Specifically on the Bybit, which is like the largest so far, it's actually like a combination of all of the acts last year, does not even equate to what happened on Bybit. The Bybit attack itself was just a supply chain attack. It wasn't necessarily on Bybit itself. It was one of the solutions they are using to ensure their wallet infrastructure is secure. So it was a developer that works for Safe, that was socially engineered, and then through that, they were able to actually attack Bybit. So it's a supply chain attack in this case.
Right, and going forward, do you think we'll see more of these, attacks? And how do you think these platforms can protect themselves and maybe investors too in this space? How can they protect their investments at this point from being cleaned out or wiped out in the twinkle of an eye?
I would say this is not going to be the end of attacks in the crypto space. Specifically, also with some of the announcements that we've had recently, with the one of yesterday from Donald Trump. Even if there has not been much more of an highlight on crypto, right now we are going to see much more than what we've already experienced. And I think over the course of the years, there's always going to be that continuous improvement in how security is being seen within this space. One thing has always been that security and compliance generally have always been seen as like an afterthought when it comes to so many of those crypto projects. But with some of the bigger exchanges, bigger services out there, security is one of the things which they kind of like build all of their infrastructures on. So I would say it is going to still continue to happen, especially when we still have the likes of DPRK in the space. Just about anybody can hack anything at this point. But the fact that we do not have a very concise and standardized security policy to guide some of these exchanges is some of the issues we're having. For a bank in Nigeria, they are more likely to have ISO 27001 as one of their standardization for security management. But within the crypto ecosystem, everything is kind of like in silos right now. So there is really not one specific information security standard that cuts across all of the different variables of what cryptocurrency is. And for like a general individual who has funds in some of these particular platforms, it's less of what they can do and more of what the government can do in terms of like having insurance around some of the assets you have on these platforms, the same way we have in like for a bank where a certain amount of your funds are secured or insured by like a Nikon. I'm not sure maybe that's what, but like, yeah, these are some of the policies that also still needs to be put in place for Web3 space, which we don't have yet.
Right, so much to unpack there, but definitely everyone wants to get safe, when it comes to investing and all of that. But thank you for unpacking that for us. Adebayo Otiami is a blockchain investigations and intelligence expert. Thank you for coming on. So, Ini, there you have it. We report insecurity in countries, but nobody's looking at insecurity in the crypto market when it comes to investments. And we have a lot of hacks.
Yeah, I bet
Well,
with this amount of money that's being lost, perhaps more attention will be given to it, because I mean, you make investment because you want to make profit, not to lose your funds.
Yeah, exactly.
So I'm sure, well, with President Trump looking at a reservoir in crypto, something has to be done.
All right, safety for everyone.
Yeah. Thank you so much. So that's it on the program today. Thank you so much for being a part of Business Incorporated. Another fresh episode comes your way tomorrow. But before then, do remember to go to our YouTube channel. Business Morning, Business Incorporated. We empower you with information. I'm Mini John. I'll see you tomorrow.